well, Donnie, you called it. October 15th. It might have been a couple days after October 15th, but diesel fuel is back on the rise. It was a little late to react to an increase at the rack price. That increase started back really, I mean, if we call the 6th the bottom, it's increased from there. There were a couple of days where
they absorbed that gap, which was we had $1.30, $1.40, I think up to almost $1.50 on the spread between retail and wholesale. But this gap quickly closed back up, and now we are less than $1, which we'll check that here just as soon. But yes, so we've seen diesel fuel starting to pick back up over the last few days. I was going to kind of keep an eye on it here daily for a little while to see if it's going to turn back around, because we saw a rack dip just a little bit. But since the spread is so low, stations are going to continue to push up on those prices.
They're going to be hesitant to flatten them out or to push them down in any way. We saw them for a while, right, be kind of comfortable in that dollar range. There was a pretty good time that they were comfortable in that dollar range. And then it took an increase in the rack price to kind of offset that. If this is if we can see rack prices stable at this level, maybe they say, hey, at $1 we're okay, and we'll level them off, but we're not going to lower them any. And I think that's the concern. And you're against home heating oil.
I don't believe we're going to see diesel fuel prices start to decline maybe until February.
Yeah.
They're going to be relatively high all throughout the rest of this year. And February could be different. I kind of talked about this a little bit yesterday. So next year is an election year. If you go back and look at 2020, you'll see fuel prices drop right before May. And it's basically maybe some of these oil companies might want to stay off the radar of politics, just as, nobody likes to talk about politics, but they want to kind of stay away from politics. They're going to let the fuel prices drop down. And then, of course, you saw November 4th, and they shot right back up.
Yeah, 2020 was an interesting year, though, because obviously the impacts of COVID had with shutdowns and things like that. It sent crude oil. I mean, crude oil closed it down $37 a barrel one day, which
went negative one day.
Yeah, exactly. So, I mean, and that's part of the reason you see the decline. You saw the drop in diesel fuel. But you are correct, right? They'll stay out. Odds are they'll let the market dictate where the price is going to go, as opposed to trying to set the price themselves, which they probably get a rep for trying to do that, when in reality, they're not the ones. They get to deal with the supply-demand dynamics of cartels like OPEC, right? And
the world market.
Exactly. So they're kind of subject to that in a way that you can almost paint them as the bad guy, even though they're just playing the world market.
It's a lot easier to put the target on that.
Yes.
Let's go to the next chart. So we're looking at the spread right now is around 92 cents, which if it stays at around 92 cents, fuel prices are going to continue to rise.
Yeah.
Until it probably gets up here at least $1.10 or a little bit higher. So currently we're at 91 cents. That can change rapidly, but
well, I mean, yeah, look, I mean, it went from what, almost $1.50 to it was below 90 cents on the 20th.
In 2
weeks. 13 days?
Yeah.
14 days? I mean, that is a big shift, especially from a station owner's perspective, that they can't, they will raise prices a lot faster than they will lower prices. And that is the concern, is that it goes up a lot faster than it comes down. And when you see this drop, it kind of lends credence to the idea that they're going to push prices up. And I mean, you could look back. I mean, look at where we were August, September. This is where I was talking about. They were almost comfortable in this $1 to $1.10 range, but then because we saw volatility in the rack price kind of level out.
Down, yeah. And then it started to pick back up right around here in the latter part of September. And which surprisingly, before when it was very volatile, they wanted $1.30 plus on their spread. Well, they've let it hang out around here, around this dollar, between that 90 cent and $1.10 mark again, but they are slowly pushing them back up here, just a few cents a day so far, but it could rapidly accelerate.
Yep.
Let's check out the NTI here. We've got diesel fuel prices going up
And underlying rates going down.
And rates going down. And so when we take our NTI and do NTIL, which is taking out the doing line haul, only taking the fuel out, you see here it is dropping down. So this is going to put a big burden on these small guys that are running spot freight because they're losing more money. They're getting paid the same. Fuel's going up, so their costs are going up. And that basically means their bottom line is shrinking.
Absolutely. Well, Donny, thank you so much for this update. We'll be sure to check in with you one more time before the end of the show. Right now, we'll take a quick break, but we'll be back with more Freight Waves Now.